Michael will be the highlight of this. I'm just going to introduce the topic of options, and specifically using options more in a general sense, not so much the traditional financial or stock option classical definition of that term options, but using options in a general sense to de-risk your business, de-risk your startup. So this is a little bit of a continuation. 5 months ago, I was on this stage and presented on managing risk. And options is kind of a subset of that. So we'll dive further into that subset of managing risk by using options to manage risk running your startup. This isn't just about kind of strategic direction. That first slide, we had some arrows pointing different directions, which kind of symbolize what options are. You can move in some different directions. Our Sales Ninja Dojo speaker this morning mentioned General Omar Bradley, a great World War II general. He's famous for many things, but he has a quote that I like. He said, "Amateurs talk strategy and professionals talk tactics, logistics." And he was famous for taking care of his people, his army, feeding them and making sure their supply lines were set up properly. And that was an option that he had to focus on. So I think that there are great lessons that startups can derive from that. So what is an option? We know a picture is worth 1,000 words, right? Let's see, Jason Dance, former quarterback at this little stadium over here. Did BYU ever run this kind of, what is this kind of an option called? Yeah, or triple threat, right? Triple option. Yeah, and did you guys run it? Not so much at BYU. It was pretty much drop back and pass. Everybody knew which option you were exercising. But utilizing this picture, look at the quarterback's eyes. So what options does he have? Number one, he can hand off to his running back. Number two, he can keep the ball and run it himself. Or number three, you see his eyes looking far downfield. If he sees a receiver that he thinks might break free, he has that option of not handing it off to his running back, not running it himself, but dropping back and throwing a long pass downfield. He also has the option of dumping it off to a shorter pass to his tight end, number 48 there. If he exercises option number one, handing off to his running back, that running back then has options of his own, right? Depending on how his blocker there on to his right, to our left, does, blocking number 45. Does he juke left and go right, fake right and go left, plow right through the middle? All kinds of options. So options within options. And that's what an option is in a general sense. It's choices and decisions. So we're going to look at kind of what the value of options are, and look at a very important aspect within options, financial and generally, which is time or time value within an option. Love this quote from F. Scott Fitzgerald. "The test of a first-rate mind is the ability to hold two opposed ideas in the mind at the same time and still retain the ability to function." So going back to this picture, this quarterback doesn't just hold two opposing ideas, it's really three or more, right? So they have the overall strategy remains the same. It's to drive downfield and score, and ultimately to win the game. But the tactics can change moment to moment. So great quote for any startup leader here, to retain that ability to function, even with different options, different opposed ideas in mind. Options have value, and this was quantified by three guys. You've probably only heard of two of them. The top guy, his last name is Black. Middle guy is Scholes. And the third guy gets left out. His last name is Merton. So Black, Scholes, Merton. And it's usually just called the Black-Scholes pricing model. Mr. Black, Professor Black, died before 1997 when Scholes and Merton were awarded the Nobel Prize in Economics 25 years ago for work they had done 25 years before that in the 70s. So this is 50 years old, but this is still the standard on how financial options, specifically stock options, are priced. And you have that a couple of formulas there at the bottom. 5 factors go into it. You have an underlying stock value. You have a strike price or an exercise price. You have a risk-free rate. You have a volatility measure or standard deviation from the mean. And you have a time value. This chart might be familiar. This is one type of an option, a financial option called a call. A call is an option to buy something from someone at a set price in the future, as opposed to a put option. A put option is an option to sell something to someone. They must buy it from you in the future. So there are option contracts. You could actually apply this to a lot of different areas in life. Young women, if there's any young women in the audience who are single, you should look at dating as options where there is tremendous risk in which asset you end up taking out an option on. And you'll be underwater, that lower horizontal line. An option is underwater before it has any value. And the underlying asset that you are considering buying in the future may, as a student or early in their career, not have a lot of financial value. Of course, we know we don't date or marry for money, right? But you can apply options to a lot of different aspects of life. And one of the most important aspects within options is the time involved. An option with 1 minute to expiration is worth less, by definition, than an option with 1 year to expiration. So the more time you have to exercise an option, the greater value, all of the things being equal, it will have. Famous psychiatrist, Holocaust survivor named Viktor Frankl is famous for saying, between stimulus and response is a space. And within that space lies our freedom to choose. Or in other words, an option in which something happens to us, whether it's in a concentration camp, a football field, or in business, and before we react, there's a space that might be a fraction of a second or hopefully longer so that you can really evaluate what are your options, and then you can choose how you respond. But options give us that ability to respond in a number of different ways, and it's part of what gives options in a general sense and in a financial sense a lot of their value. Okay, so who can use options? Obviously, you must have an MBA, a Master of Business Administration, to understand options and to use them. True or false? Patently false. In fact, we use that term master so often that it's so many people, including me, have an MBA that it becomes almost meaningless. It doesn't mean what we think it means. If somebody says that they are a master of business and have all the answers, run from that person, because they don't. So anyone can use an option. Nations can use options. Think of the current war going on as Russia has invaded Ukraine, a much bigger country, 1,000 times more powerful army. And when this first started in February, I was just hoping against hope Ukraine could at least bloody their nose a little bit. But what's happened? Here's an example of options that Ukraine has deployed. And you can put it in financial terms. They have procured Javelin missiles from the US and other types of shoulder-mounted tank-destroying missiles from other NATO countries that they have deployed incredibly well. And their strategy, of course, has been just to survive, But the tactics have changed, and evidently Russia wasn't anticipating this, where an $80,000 shoulder-launched missile can destroy a Russian tank that on average costs $4 million. Some of their tanks are older and they cost a couple of million. Some are newer, and the newer tanks that cost 10 and 15 million are also being destroyed. But the economics of this give Ukraine tremendous leverage as they have been invaded. Think in terms of David and Goliath. What advantages, what options did David deploy? He had the option of being fitted with armor and carrying a heavy sword. He declined that option. He went instead with the option of what he knew best, being light and quick, using a slingshot. And it's been said that that wasn't a fair fight, but not in the way that we usually think of in terms of the classic underdog. Goliath didn't have a chance in that fight. David was using the equivalent of a Colt 45 that he was very accurate with, and Goliath couldn't move. He was big and heavy. Same kind of thing is going on in Ukraine now. Hopefully this will continue as the U.S. and other allies continue to give aid to the David in this fight. But very effective use of options in this case. Startups, of course, and this is why we're here, can effectively deploy options. And we're not just talking about stock options in the employee option pool. Those are important, and those have great strategic and tactical use, but there are all kinds of options at the disposal of a startup. So we're going to take a case study. Michael Romrell, come on up. Michael is co-founder and CEO of Literal, a great device technology that you can put on your device that has really just taken off within ed tech. School districts are buying this technology to replace big bulky books, and it's very cost effective. But more importantly, it engages the students in a way where reading is cool again, and they're getting tremendous revenue traction, but also in capital raising. So, Michael, if you'll tell us about your recent capital raise and maybe some options involved.
Well, hello. All right, so I was asked to come up talk about some capital raise stuff that we've been working on a lot lately. And one of the things that Bart mentioned, which rings true to me here, is that football image. Right? As we talk about options, we're talking really about flexibility. We're talking about going into a situation where you can keep your options open and maximize the number of paths that you have to success. And so when we first set out to put this round together, we knew that there were a number of different variables that would help contribute to the success of this round. It was, how much are we raising? At what valuation? Do we do a price round? Do we do a safe round? Who are the investors that are the right folks for this round? Is it angels? Is it the bigger groups, the bigger VCs? And there were a lot of these elements, right? And so again, I'm thinking back to, if I'm the quarterback, am I going to hand it off to my tight end? Am I going to chuck it out to a receiver? What am I doing here? And so step one is you pick a solution and you start, and you know that it's not set in stone. And so we decided to raise $2.1 million on a safe note with a $7.6 million pre-money valuation, and or cap, I should say. And we knew that we wanted to get that higher. We knew that we wanted to raise closer to 4. We knew that we wanted a valuation closer to 10, but we needed to be able to have some levers to move. And so we went out and we said, we're going to start with angels. That was who we thought we were going to fill this round with. And we got a handful of folks committed, which we were really excited about. And at one point, so the thing with investing, with raising funds, is this: it always starts no, 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 yes, no, 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 yes, no, yes, 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 no, yes, hey, can we come back in? It's oversubscribed. And that's what it looks like pretty much every time. So you got to get really used to that, and it sucks until those yeses start coming in, and then it feels really good. Anyways, so we started getting a few of those yeses, and then we got to that tipping point, which naturally happens, where we had an angel come in and say, hey, I want to take this round. And can I just take the whole thing? He said, well, why, yes, you can. Come on in. And at that point, we had a handful of these other options, right? These wide receivers out there that were just on the fence. And as soon as you tell someone that they can't come into a round, everyone wants to come into a round. It's a magical thing, and that really needs to be part of the strategy, is how do you create that deal heat? How do you get to a point where you can tell folks there might not be room for you? And that created exactly what we needed, which was wide receivers suddenly started becoming really open. And the field cleared out, and we were able to start picking and choosing. You were actually the ones that we really want. We would have taken you, but we weren't really thrilled about you, so we got to be really picky about who we pulled in. And the other benefit was we had this incredible investor, this big VC fund, who was very excited about what we were doing. They saw the vision, and they said, well, wait, I think we want to get really involved here. We want to put in at least 1.5. And I said, well, all right, let me go see what I can do. And I talked to our investor that wanted to take all of it, and he said, well, no, I really need to deploy this capital. I really need in here. And so we went back and we said, well, we can oversubscribe. And again, this was back to our original plan, and we knew we needed to raise more than 2.1. We knew that we wanted a bigger valuation. And so we worked that out with Bitcraft to say, we need, or let's raise the valuation, okay, so it doesn't harm our equity that we've got as founders. Let's allow an oversubscription to get you in, which we did. And once you are oversubscribed, again, that adds to the deal heat, and we started pulling in more folks to come in. And so what ended up happening is we need to go back to some of our prior investors that had already come in and say, yes, I'm committed on a safe. And we need to go back and say, hey, we've got some good news. We are going to convert you right away over into a priced round, but it's going to be at a different valuation. And so we had to have that conversation, but it worked out really, really well for us. And so we wound up with a really incredible valuation. We wound up with the raise that we needed to raise to put together, and that's all closing here in the next week or so. But that's the short version, I guess.
Okay, thank you, Michael. Be thinking of questions you can ask Michael. I have just a couple more slides, and then we'll open it up for some quick Q&A. But options within options, in essence, is what you guys had, because you may not have thought you had many options going into it. You were getting no to investment. But as soon as you get a yes, as soon as tight end springs loose from coverage a little bit, that tends to open up other receivers, metaphorically speaking. So yeah, thanks for helping me torture that metaphor a little bit. So just two more concepts to share here. This chart shows the Dow, S&P 500, and NASDAQ declining year to date. A lot of volatility, mostly on the downside. We're in a down market. So options are going to be more important, more valuable than ever. Keep your options open in this environment of rising inflation, rising interest rates, decreasing money supply, a possible recession on the horizon. Those of us with any amount of gray hair at all have seen this before. It's called the business cycle, and it goes up and down. And it's almost as natural as the tide coming in and out. But it happens. And the one that we're now in the middle of doesn't look near as bad as prior ones. Certainly not as bad as the 07-08 Great Recession. Not as bad as the meltdown from the dot-com crash and the telecom nuclear winter, as it's called, in 2001. Certainly not as bad as the stagflation with high unemployment, high inflation of the 70s, where interest rates on a mortgage got above 20%. So we're not there yet. And the thing that downturns all have in common is they end. But while you're going through them, it's very helpful to have some options at your disposal. So kind of think through, what are your options in maybe conserving cash, cutting expenses, cutting that monthly burn rate. Maybe you have the option to forestall a new hire for a quarter or few. Maybe you have options like Literal did in raising capital. If you can raise capital now, we would certainly suggest that you do so, because you may not be able to in just the very near future. And whether that lasts for the rest of 2022 or into 2023, no one really knows. Again, kind of like somebody that says they're a master of business administration. Anybody that says they know for sure what the markets and the economy is going to do, hide your wallet and run from that person. But prepare by having options at your disposal. So last slide. Anybody know what this image is of? Who is this? Yeah, Hernán Cortés, a Spanish conquistador. And he's famous for what's become part of a, kind of a standard, almost, what's the phrase where it becomes passé? A cliche, thank you, of in leadership. Burn your boats, focus, eliminate options, right? Anybody know the problem with this image and this story? It never happened. Cortez did not burn his boats. Okay, this is a fiction that we've told over and over again, to the point where it becomes so cliche that, oh yeah, burn your boats and focus and remove options. But it did not happen. Well, there, wanted to get that don't up. We are advocating that you do not burn your boats, do not burn your options. Cortez did scuttle 9 of 11 of his ships, and he removed some options for his men to return to Cuba, where Cortez had been summoned by the governor, the Spanish governor. He was in some trouble, and he didn't want to have to go back, and so he arranged it so that he wouldn't have to, and he could stay in Mexico, and he ended up plundering the country and causing the death of over 90% of the indigenous population. So not sure Cortez is the guy we want to use in our leadership examples. So keep your options open, and those options have value. A lot of the value has to do with time. The more time that you have to exercise the options, the greater value they will be. And you can get through a down market. It's happened before, it'll happen again. It may not be pleasant for the short term, but in the long run, these things tend to kind of rebound. And if we showed had a big chart of the market and all the crashes of 1987, or the international currency crisis of 1998, or the downturn in 01, or the Great Recession in 08, they look like little blips in a long upward trend of market prices, which is symbolic of the economy and market forces in this country and throughout the world. So that's the headline. Is yeah, the seas may get a little choppy, but you can get through it, and options are a great way to help you get through it. So with that, does anybody have questions for Michael, or on anything in particular on this topic of options as a way to de-risk your business? Going once. Going twice. We almost got away.
Almost. I think it would be good if Michael just told us what his business is.
Yes, I can do that. All right, so we are Literal. We are a Netflix for books, and we actually have shown that we can make reading actual books 68% more engaging than social media. So raise your hand if you or you know someone that you wish you read more books. Okay, all right. So show them Literal, and they will actually spend more time in a book than they spend on social media on average. And we are improving that outcome more and more every day as our product gets better and our awareness gets better. as we distribute that through schools. We recently just got back from a licensing expo in Las Vegas where we had conversations with Warner Brothers and Legendary Films and Paramount and these massive property owners who were just blown away and excited at the opportunity that we are giving them to monetize their film and TV scripts, something that they cannot do today. And so we're bringing in some really cool properties to excite a new generation of engaged readers.
And how many engaged readers are we working with nowadays?
Today it's over 14,000 engaged active readers. And that's, so we're excited.
Thanks, Michael.